My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Well, hey everyone, welcome back to this episode of the show, and today, zooming in from beautiful Manhattan Beach, California, we've got a very accomplished real estate investor, syndicator, best-selling author, you name it, especially in the multifamily space. It sounds like Gary's done something around there, Mr. Gary Lipsky. So Gary, welcome to the show.
Thanks for having me, Dave.
My pleasure. All right, let's start back just very, very briefly about what got you sparked, what got you into the whole real estate investing game in the first place.
I love the creative side and the business side of things. I've always been an entrepreneur, but real estate really hit on both facets of that, and like the forced appreciation you can create. Like I can see, a multifamily property and know exactly what we can do with it, what's it going to cost. We can look at the demographics and pretty closely analyze what value that it should be. Now, certainly you've got market conditions and other things that could play a role in that, but I love the fact that I have a lot of control over it versus if I invest in the stock market where I have zero control. There's a lot of manipulation. It goes up and down like crazy.
Mhm.
And multifamily is not like that. That creative, that
Well,
business.
you can manipulate your asset. That's the beautiful thing
Right.
about multifamily, right? You can.
Yeah.
So what sparked that in the initial, like what clued you into real estate, especially multifamily? You said you're an entrepreneur. What kind of stuff were you doing before, and how did that lead into real estate?
Yeah. So, my parents never talked to me about real estate. I wish they did. Um, but my first house I bought in 2002, and I never looked at it as my forever house. I looked at it as a way to build wealth. And so I studied neighborhoods and found something in the path of progress. And we bought the house, fixed it up, opened up the kitchen, turned the garage into an office space so I can get enough money to pay my mortgage. I had zero down and I was in debt, but it was a way to build wealth. And I really liked that I was able to extract value and really create a lot of value to the house. And then over time, I had some single families, but not until I sold a business after that. I was in film in my 20s. I
Oh,
co-produced a few low-budget independent films, and then I started an after-school outdoor rated leadership development company.
wow.
Um,
That's awesome.
and
That's very diverse.
yeah,
Yeah.
thanks. And so we were working with 9,000 students daily throughout Southern California. But I've always wanted to create win-win scenarios. So in there, I was providing a tremendous service to the community and also being able to, have my own business and provide for my family. And real estate really took those experiences and that again, that creative side, coming up with programs for students or film and that business side of really knowing the numbers and I got into some different groups and they talked about adding zeros, like just
Uh-huh.
because if you could do it for one house or a couple, you could do it, add another zero to there. And so going bigger. And I love the ability to really have economies of scale on the multifamily.
Very, very cool. Whenabouts did you get involved in your first multifamily deal, and what kind of a property or project was it?
Yeah, so I started investing in other people's deals when I started out, and
Okay.
so that was 2017. I was using my IRA account and stuff like that. I didn't buy my first deal to 2019. It was 1.65 million and 42 units. And I mean, quite honestly, we should have bought the whole block at that point.
Yeah.
But that was
Hindsight.
in two. Yeah,
Yeah.
exactly, exactly.
Perfect. So, and fast forward to today. So that's 2019, right before the pandemic. Time we're recording this right now, it's 2024. What does the portfolio look like at this point, Gary?
Yeah, so we have seven properties right now, a little over 1,100 units. We've sold four properties. I think the average is close to 50% IRR. Part of it
Nice.
was, I mean, we were selling at a really good time to sell. So I'll be straight up with that. But we also bought in the right places. We execute the heck out of the deal, and then we sold when there was a good time to sell versus holding on for way too long and then losing value over time.
Right.
Um, so uh, we have six properties in Tucson right now and one in Phoenix. And so we've been focused on Arizona. We also have been looking in Vegas. We just came in. We were in a best and final there, but didn't get the deal there. Someone was willing to pay more for us, which is fine. We've been looking in Albuquerque for a while, and we have a great team that helps us do helps find helps me do deals.
Well, I was poking around on your website before we jumped on the call. That looks like something you've done a very good job of is building up a team, getting help, shoring up area, being able to have a life. So you're not a one-man show trying to do all of this. Maybe walk me through, how did the team develop? At what point did it make sense financially to hire people on to do stuff? Because I've interviewed a lot of syndicators, but a lot of them are staying really, really small, and they haven't really grown much of a team. So what is
Yeah,
your insight there?
it is important to grow your team. If you get hit by a bus, like who's going to be running the show? And there's only so much I can do. And certainly in the beginning, I was working crazy hours. But that executive assistant, that was my first hire,
Nice.
and super important. She's kind of merged into the operations manager, and she handles investor, um, the investor portal. She was doing some marketing. She was doing a little bit of everything, and over the years, she's done more of one thing or of a few things and less of so many things.
Yeah.
Um,
So
and
same
then I
same as
hired,
you initially. You were a jack of all trades doing everything. You
yeah.
hired that assistant, you delegated a bunch of stuff. Eventually it got to be too much for her. So she's focusing more on her areas of strength. Who was the next hire after that?
So I hired an acquisitions slash asset manager.
Oh, okay.
And so
Nice.
this person would help me manage the deals that we currently have and look for more deals.
Nice. And
Yep.
then who after
And
that?
then I hired probably way too late in the game because I was handling all the investor relations as well. But I hired an investor relations director, and so he would cultivate new relationships and any new investor that came on board. If we had a webinar or whatnot, he would try to schedule a call with that person. Um, so that was the next hire. And then I still realized there's just so much on me still as we continue to grow. I
Yeah.
hired an operations director, so he was able to find more people when we were looking to hire them and build out our I had goals and everything, but really help with the OKRs and responsibilities for the team. Um, when we wanted initiatives, whether it's AI, whatever it is, he could take that lead and run with it, and I could just focus on the real estate side of things. If we
Mhm.
launched a fund, he could help dealing with the SEC attorney and all that, and setting all up the paperwork. And then ultimately in October, we hired a marketing person, a real marketing person for the very first time. So, um, who's been a big help on keeping us on brand. And she's been working with our properties because what they've been sending out as our rate sheet and everything. We just greatly improved that,
Mhm.
working with them on the emails. Obviously, she handles all of our email correspondence and coming up with new initiatives on the marketing side for us. So that's been another big addition. But it does, cost a lot of money to do
Well,
these
that's
things.
what I was going to ask. That's so how many people are on the team right now? including
So,
yourself. That's it.
yeah, so including myself, we have, I think, 7 people on the team right now.
Yeah. So that
Um,
are some of them virtual assistants from overseas, or is everybody local?
Everyone is local.
Wow, that's a big
Yeah,
overhead for sure. Yeah.
right. And we've probably done, I think, one deal in 19 months just because, it's very little deal flow right now.
Mhm.
Sellers are still looking for probably 10 to 15% more than they're willing to sell for. I mean, luckily, I banked money when we sold some deals.
When you're flush, yeah.
Um, and just kept reinvesting in the company versus, I'm not out there going on luxurious vacations or buying stuff I don't need. So I'm in it for the long haul and wanted a really good team so that this is a real business. And so I'm treating it as such.
So based on what you've learned from building your team, what, if anything, would you do differently if you were doing it over again, or giving advice to somebody who's in the space that doesn't have a team yet?
Yeah, I think I've always been a few months behind of hiring the next person that I need.
Mm.
Um, and that's, you're trying to, conserve cash and
Yeah.
keep your overhead low. And so I think that's a common theme with people. But, if I can get someone to do a job for $30 an hour, $20 an hour, or like you said, outsource, VA, $10 an hour, take those small, lower cost tasks off my plate will really free up my time and allow me to do what I do best. I think that's it's very important for someone that's looking to grow.
Yeah. No, very, very good advice. So I'm seeing a good looking book behind you, best in class, I think it says. I understand that you are a best-selling author now. Congratulations. So tell me a little bit about the book and why, how that came to be, and how you're leveraging that to help grow your business.
Yeah, y- no one was really talking about asset management. A lot of the gurus will teach you how to get your first deal, but no one's telling you what to do once you get that deal. And I started writing this after I had only done 2 deals. And so there was definitely like imposter syndrome. And it took me a while to like say, okay, I'm really going to go for this and write it. And so I started a podcast, started writing the book, and the podcast was based on asset management. So I looked at it as a learning tool for me. How can I rocket fuel my business by bringing on people that I wanted to learn from, and how can I share the knowledge that I've learned and developed from all these other businesses. So it's kind of like a 101 on asset management, but it's been a really worthwhile tool for people. If I when I go to conferences, there's always one or two people that come up to me and say, hey, that book was like super important to me.
Nice. So did you kind of combine your own personal experience and learning along with some of the information you got from your guests, and that's how you wrote the book? Smart.
Absolutely,
Are
absolutely.
you,
Yeah.
are you still running your podcast?
We just recorded the 200th episode not too
Nice.
long ago. It's kind of we it was originally the real estate asset management podcast, and now we've since changed the name to the real estate investor podcast to kind of broaden our width. And I had done, I don't know, 125 episodes on asset management, so it was time to kind of
There's only
change
so much
direction
you
a
could
little
say
bit.
about it, I guess. Eh? Yeah, I
Yeah.
hear you. I hear you. Very, very cool. So I understand, Gary, that I don't know if it's recently or not, but you've started not one, but I think two different funds. Is that correct? So maybe walk me through why you decided to start funds, when you started the funds, what's been the learning that you've gotten from starting these funds, pros and cons, that kind of stuff.
Yeah. So we launched the multifamily impact fund this past summer. Um, we knew obviously super hard time to raise money.
Hmm.
Um, but we wanted to have create more diversification for investors versus just investing in one deal. They can invest in a multitude of deals with that fund. Um, then recently we launched the income fund, which is like a pref fund that pays 8%. there's no other fees or um, miscellaneous expenses in there. That's really um, you would invest in that if it, versus a money market or a savings account. You get a little bit more juice, a little less risk because you're lower in the capital stack. So those are the alternatives. Um, we haven't raised tens of millions of dollars. We're not there yet, obviously, but it was a way to offer some diversification for our investors and a way to have a little bit more fundraising capabilities for us for different strokes for different folks.
Mhm.
Um, you know, it it's the we'll see what it's going to be in another year from now when investing really picks up for people. Certainly, when we offered people that they can invest in one deal itself for the fund because we were worried that we were going to lose a lot of our investors if we
Mm.
just had the fund piece. And that was the case. We definitely had about 50% people invested in the fund and 50 people invested in the single purpose entity.
Mm.
Um, and so it just, again, it gave investors choice versus this is the only way you can invest with us. Um, and it was a way to get our deal done, quite honestly.
Yeah. And then I guess also, correct me if I'm wrong, it broadens the spectrum of who can invest with you. Like for your funds, can everybody and anybody invest in those funds, or does it have to be accredited investors?
It does have to be accredited
Okay.
investors.
Okay.
We in the past we've done a lot of 506Bs, but because we've been advertising, we just stuck to the Cs.
Got it. Got it. So with the experience of starting these funds and raising capital for them, pros and cons, what would you say?
Um, we're playing for the long haul. And so
Yeah.
that's why we started the funds. We knew it wasn't going to be easy in the beginning. Over time we'll be able to rev that up, but start small, start somewhere, and let's see how it goes. And if it doesn't work out, then we're doing our single purpose entities, which is fine. But we're investing in the future of our company to have a little bit more dry powder on the sidelines. And we'll time will tell.
Yeah. No, it makes a lot of sense.
Yeah.
It is a big, eh, from what I understand, I've never started a fund myself, but everybody I've talked to, it's huge pain in the butt. Well, it sounds like you got an operations person that helps out a lot with that, thank goodness. But just the rules, the regulations, the red tape, the reporting, the all that kind of stuff, and the cost, the legal cost to get it set up is pretty onerous. So you have to be at a pretty good level for that to make sense. Is that correct?
Yeah, I mean, there's some companies that help you set it up, but there's a lot more involved than a syndication, and so we came up with like 100 questions of what an investor would ask, and then that helped us kind of make sure, hey, oh, we don't know the answer to that or to this. We need to figure this out,
Mm.
obviously, before we start the fund. So we just kept going through all the different scenarios to weed out all the questions that we may have or things that we haven't thought of.
Yeah. Well, it sounds like you guys are running a pretty large and sophisticated kind of operation, Gary. And so hats off to you for that. And now you've got help with all sorts of different things, especially around investor relations and marketing and raising capital, bringing on investors for your deals or for the fund or combination of both. What are you finding that's working best now for finding investors and raising private capital?
Yeah, that's a good question. There's not one thing
Yeah.
that I could say that's the key piece, but it's doing lots of different things
Yeah.
that has brought us investors because it may take five points of connection for them to invest.
Mm.
Some people may invest, right away, but it's like they saw me on a podcast, they saw the book, they saw me speak at a conference. Maybe they attended a webinar and they've built trust over time, but it's a number of different things. It's just not one thing
Mm.
that is solely responsible for getting someone to invest. Except I would say referrals. That is the number one way, because someone's already invested with me and they say, hey, I like investing with Break of Day Capital and Gary, and I really like what you're doing. That's probably the easiest way. And once you sold a couple deals, as you get rolling, it just picks up steam. You get more and more referrals, and it gets easier and easier. But um, it's a lot of work as you continue to want to do more deals or go do bigger deals.
Hmm.
Particularly, I would say the last 2 years have been really tough raising capital, and that I mean that's everyone I speak to.
Yeah. Yeah. Why do you think that is, Gary? Why are so many people so gun shy about real estate or multifamily these days?
You've got a couple of different things going on. One, a lack of deals selling, so people don't have a win,
Mm.
or and money to invest. Two, you've got a bunch of deals out there that have had capital calls or potentially losing their money too. So that's another thing. But interest rates rose. You had a lot of deals that stopped distributions. You got a lot of people nervous, wanting to see where interest rates are, when they're going to go down. I think some people still think that interest rates may increase, which maybe maybe way down the road, but the next move is going to be, in my opinion and most people's opinions, it's going to be a rate cut,
Mm.
probably in September, but we'll see how all the data comes out. Um, so those are some factors that have played a role in that. But there's cycles to everything, and so
Yeah.
you've got to work through it and adjust your business. Maybe you do smaller deals, maybe you partner up with some other people. Um, I see a lot of people jumping into different asset classes. We've stayed multifamily value add. We're not going to all of a sudden do car washes
Mm.
or self storage.
Self-storage or
It's
mobile
just,
home parks or
yeah,
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 got it. No, that makes a lot of sense. And I think it's really smart when it comes to the raising capital side of things that you're taking massive action across a bunch of different fronts. Yes, referrals are great, but sometimes I've seen people, if that's all they do is rely on those referrals, you can't really control that. You can't turn that off and on kind of thing like you can with getting the word out and speaking and writing books and doing the podcast and all that kind of stuff as well.
yeah, yeah. You
That's
can't grow your business, so you really need to do a lot of different things, see what works, see what doesn't work, um, and keep staying at it.
most definitely wise words. All right, my friend. Well, great interviewing you. Great getting to know you a little bit. Thanks for sharing some of your insights and your wisdom about funds and building up a team and when to start that and why to start that and ideas about the capital side of things as well. If people want more Gary Lipsky, which they should, what's the best place for them to find out more about you and to connect?
Yeah, they can go to breakofdaycapital.com. On our website, you could sign up for newsletters, see what deals we got going on, our podcasts, our investor resources. So tons of information there. And also we've got the social media links as well.
Perfect. There you go. Well, thank you very much, sir. This has been a lot of fun.
Thanks for having me, Dave. Appreciate it.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.